Welcome to Ty's Daily Market Update. I'm Ty Wong reporting from New York, and it is Tuesday, August 4th. What does the president say today? This is a while ago. This is early this morning. Trump says the deal is imminent as Iran talks restart Monday on denuclearization in Hormuz. Well, we will see, right? But the market seems to like it. We haven't really seen any more posts on it yet, specifically on Iran. Bloomberg reports that Qatar and Scott Bessent, Treasury Secretary, signaled progress in a short-term U.S.-Iran deal. And this is important because Bessent is Secretary of the Treasury. He's really clued in. He's not, he's not Rubio. He's not Witkoff or the other fella or Kushner. And you don't expect him to be up at the forefront of the negotiations, although I'm sure he knows exactly what's going on. But of anybody really in the cabinet, Rubio and Bessent, but Bessent especially is, I think, the one that the market trusts the most. And the fact that Bessent came out and said it, I think, carries extra weight. One of the reasons why the market has been so strong so far today. So the prospect of a deal between the U.S. and Iran appeared to be gaining traction on Tuesday. Qatar said a proposal had been drafted, and Bessent sounded hopeful. Now, they both said that there's no solid agreement yet, and Iran has not signaled there's been progress on Hormuz. We're in talks with the Iranians, and I think there's a chance we may have a deal today or tomorrow to open the strait, Bessent said to CNBC this morning. And he said, will there be a toll? He goes, I think there would be freedom of movement. Now, the Foreign Ministry of Qatar said a proposed de-escalation resolution was being circulated between parties, but there's no timeline. And they said the focus is finding a short-term resolution, and working from there. So the fact that Bessent said it definitely gave it a little more weight than if it was somebody else. Okay, Brent, moving lower. We are down at the bottom of this band that we've been looking at. Sort of this peace-ish kind of region. We're down around the 80-ish level. Could we go lower? Yeah, we can go lower. Do I think we're going to collapse? I don't think we are going to collapse. I think this low is going to be probably a low that's going to be in place for some time. So, the easy money was made this way. The people who got out did a great job. And now I don't know if I really want to get heavily involved here. Looks like there's more room on the downside, but I don't think it's a lot. Gasoline and heating oil, gasoline and diesel down 3 to 4%. That's important. We're seeing the candles are gasoline, the line is diesel, heating oil, but gasoline prices at the pump have really not come down. They got up on the 20th of July, they got up above $4, and it's still $4.10, slowly creeping lower, which is why yesterday, political reports that Trump said, in an interview, he said they're making, ExxonMobil and Chevron is making too much money. And now these are his long-term industry allies. He loves the oil, he loves pumping. But the fact that gasoline prices came down slowly and are now looking like they're coming down slowly again is a problem for him and the Republican Party in the midterm elections that come in November. Trump said based on a shortage, they're making too much money, Trump told reporters in the Oval Office on Monday. I don't like it, and I should be the last one to say, because I'm the free enterprise guy, there's nobody bigger. They ought to, too much money, Chevron, ExxonMobil, too much money. They ought to give some of that back to the public, cut the retail price. In June, he was angry enough to ask the Justice Department to investigate big oil companies for not bringing down gasoline prices fast enough as crude oil prices weaken. Now, of course, that's a threat because there's a private, open, free market economy. You charge what the market will bear. And pump prices are generally set by the retailers, often sole proprietors who own gas stations, rather than major oil producers. Now, certainly, I think big oil will have an impact if they want to. These two companies' chief executives warned in earnings calls Friday that a shortage of refining capacity could keep gasoline prices high through the fall. Now, I have never been a fan of overtaxing windfalls, like a windfall profits tax. You made too much money, so we are going to take some of it more from you. We have tax brackets for a reason, but if you're the government, you're not in the business of subsidizing losses, which you should not be unless it's a bailout and you take out the equity investors. You shouldn't overtax windfalls. Sometimes you win, sometimes you lose. That should be the market. But in this case, I would say big oil should be long-term greedy and not short-term greedy. In other words, if you can help the president keep at least the Senate, it's going to make the next 2 years much better in terms of the operating environment for you than otherwise. So lean on gasoline prices a little bit, get them down to $3.25, $3.50 in the fall. That's going to help the president, help the ruling party, and it would be good for them as well. We'll have to see if they do that. If you look at the oil majors, here the candle is ExxonMobil, the blue line is Chevron, and you can see this is where, right here is where the war started. You can see that the oil major stocks are flattish since the war started because, oil prices are higher, but not dramatically higher, and the market discounts. Okay, let's take a quick look at earnings. First of all, let's look at Palantir. Came out after the close yesterday. 41 cents earnings per share versus 34. It's a 20% beat. They beat 8% on revenue. The market is absolutely loving it, as you will see in a second. Palantir up 26, 27% today. That is a wild rally. We have SpaceX coming out after the close, as well as AMD, two really, really important ones. Probably more important than Palantir even, I think. But Caterpillar, Merck, and McDonald's have reported today. Caterpillar had a couple of nice beats, particularly on earnings. They're up 6%. Merck is doing fine, up 1%. McDonald's, they lost a little bit on revenue, but I think guidance was very good. They're up 1.3%, which is pretty big for McDonald's. Okay, so Palantir, I took a combination of the two from Barron's. This side is from Barron's. Forgot the label. And here's the Wall Street Journal. So we cover everything. On otherworldly results is what the CEO called their results. Demand for AI sovereignty has now been unleashed. They're up. Their growth acceleration in the U.S. sales was up 115% in the quarter. That's more than doubling in the quarter, and it's cutting through this narrative. If you remember, we'll look at a chart in a second. Palantir got up to over $200 in late last year, and it's been straight down, almost hit $100 not too long ago, and now it's bounced significantly. The story had gotten, can they really grow above the U.S. government? I think the market got quite bearish. I think a fair number of longs got out, but looks like this report is cutting through that bearish narrative around the software companies that has sunk Palantir stock this year. U.S. commercial sales up 150% year over year. That's, U.S. commercial is a much bigger market than just the U.S. and even state and local governments. So that's really good for Palantir. They're jumping back in this time. William Blair analyst Louis De Palma said the results have shifted the narrative around the stock from AI loser to AI winner because there's no public software company or defense contractor with the same combination of revenue growth and profitability. Adjusted operating margin improved to 62% from 46% last year and beating projections. But again, this U.S. commercial sales is what's really helping the stock. Basically, what they take, all the data of an enterprise, they put it into a soup, add their algorithms to it, and tells you a lot of things that you probably didn't figure out. So it's a huge run from Palantir. Now here's the stock, right? Been on a downtrend since this November high here above 200. Really pretty, we had a spike to 160, then drops to 104, right in this downtrend. And today we're right above the downtrend. Now we're going to have to consolidate around, to really break this. If we go back into the downtrend, that's a little bit of a concern. I own it. I think I'm going to sell a little bit of it today because it is a great stock and no one else really does anything like it. But the valuation is very high. I mean, at today's big jump, we're talking about last year's PE is 138. At current prices, the forward PE is 85. That's really, really high still, even if it's earning. I mean, if they double their earnings and the stock price stays here, then their forward PE would be like 42, 43. That's still quite expensive. So I think if you're long this one, you've held on, it's been a little painful, I probably would sell a little bit. Okay. Markets, new highs in S&P 500 thanks to Besson and lower oil and possibly the straight open again. S&P 500 up 1.8%. That's a big. We had a big rally yesterday, bigger rally today. SK up 6.5%. That'll be good for the Korean markets. Bonds bounce again. The 30-year not bouncing as much, but I think that'll be a couple days in a row where bonds are doing better. Crude substantially lower, 5%. Metals, especially platinum and palladium, up significantly. Gold back up to 4,100. Let's see whether they can make any serious headway here. Silver up to 60 cents. The only disappointment is crypto. Really not doing a hell of a lot of anything. Maybe it's concerned that we're not just going to get the Clarity Act, but that's disappointing. Okay, NASDAQ 100, the candles are the daily, not up at the highs, but, really breaking down. We're worrying about lower lows. Well, we're certainly getting higher lows now and higher highs. The bar here is the Philadelphia Semiconductor Index. That's up nicely as well. In this little rally, it's trailed in NASDAQ, but overall, both of these are doing well. The S&P 500, tech is absolutely on fire. Tech is up 4.2%, which is why we're driving. This was the high. Don't have to worry about that anymore. We'll get rid of this for tomorrow. This is a big move. I would expect some consolidation, and I think that could come depending on how SpaceX does and AMD does after the close. SpaceX blockbusters earnings report is coming. What to watch? It's a lot of data here, man. And it's the first time they reporting as a public company. So, the numbers, the estimates, they're all over the place. Basically, nobody knows where it's going to go. $1.4 trillion company was $3 trillion a company a few weeks ago. I mean, it lost half its value. So initial quarter suffers from extreme estimate skew. In other words, no one knows what to expect. We have no idea what it is. It's like, okay. So remember, 3 segments. So what to watch? 3 segments: space, connectivity, and AI. The space business is the launch business, working to ready the huge Starship rocket for commercial service. Connectivity is Starlink, which has more than 10 million customers at the end of the first quarter. The AI business is XAI, and they have some data centers. So AI business generated $800 million of revenue in the first quarter of 26, but lost $2.5 billion. Capital spending was $7.7 billion. I mean, you're spending a lot of money to make money later, right? They have agreements with Google and Anthropic. The Anthropic agreement was at $1.25 billion a month, ramping up, but we don't know how much they're going to show. Now, for the Starship spent $1.1 billion in capital expenditures. They generated 2025 sales last year of $4.1 billion, operating loss of $657 billion. So, that's the launches were for the Starlink business, which is making money, but we'll have to see where space is. And then finally, Starlink had 10.3 million subscribers at the end of the last quarter, up from 5 million a year before, $11 billion and $4 billion in income. So they'll see subscriber growth. How many more subscribers do you have? How much money you're making per user, and what kind of backlog you have in Starlink. So that's going to really help set the mood. Are they going to be just okay? Are they going to be like, oh, that's really a rough one? Or wow, it's that's really amazing. Don't know. Here's SpaceX, IPO to 135, high of 225 a day later, but then we get down to 104 here. Now, one thing that people are concerned about is August 6th, about 900 million shares become available to trade, and the week after that, another 300 million shares. So 1.2 billion shares start sellable the 2 weeks August 6th. So, basically this week after earnings. By the way, sorry, this is not $13 billion. This is 13 billion shares outstanding. So that's, 10% of the float. That's a lot of shares that could hit the market. They're not going to hit all the market at the same time, but the market's concerned about all that new supply coming in. Now, there's going to be huge new supply from Elon, but that's not going to be next year, and he may or may not sell it. Okay, just a quick look at data. JOLTS job openings, kind of right there. Logistics managers, we'll look into that a little more often now. A little lower than previous, but still very tight. That means, shipping and warehousing very, very tight. Factory orders, ex transportation, a little soft, but, that's volatile and tends to be a little bit trendy. So tomorrow, the big one, we have ADP, and then payrolls on Friday. Thanks for tuning in. I'll see you again tomorrow.